Well, hello everybody. It's midweek update time. Joe with you here. It's the 10th of September, another Wednesday, and we've got some fun stuff to talk about. You guys know how this works. Make sure you take responsibility for the outcome, and thank you for sharing, and we can continue to do so.
All trades and analysis in this video are for professional traders only. This video has been released to the public after a delay required by our compliance department. Maverick traders receive this market recap immediately, along with real-time trading support and resources. Maverick Trading is a proprietary trading firm that backs professional stock and options traders with firm capital. Our traders keep 70 to 80% of the profits they generate. If you're ready to become a professional trader, click the apply link in the video description below. Let's break down what happened in the markets today.
So, let's first just get started with the current outlook in the markets. And what I found is, well, today was big. The PPI unexpectedly drops for the first time in 4 months. Now, however, this number didn't miss a little bit. It missed a lot. So the last announced PPI was a 0.7 increase. This was a projected 0.3 increase, which was it was expected to slow down, but it was still expected to increase. This came out at negative 0.1. This was a decrease, the first time we've seen a negative PPI in months. The markets took it with just, well, obviously they liked it, pushing everything a little bit higher. Okay, so that's a really bad miss. But with the expectations of a rate cut at least 25 basis points, that's really making the argument of a 50 basis point. Let's see what the CPI does tomorrow. I think there's going to be a lot of emphasis on that. So that's the first thing I noticed today that was really kind of shook some of the trees out there. New highs set on both the NASDAQ and the S&P. They both actually gapped up. We'll take a look at the chart here in a second. And then the other big piece of news was Oracle. Oracle missed their numbers. We can pull up the chart if you'd like. They missed their revenue. They missed everything by a little bit, but that didn't matter because their projections on their AI expansion and the plans to do so, including some contracts that have already been in the works or signed. I didn't get to put too much into it, folks, before I got into class here. But the AI revenue growth for the future is supposed to double from 2026 up to 2030. And we're talking up to about $145 billion just on that alone. And the markets really ate it up. So this is kind of where we're sitting. We're at a +1 above the 20, the 50. That hasn't changed, a +3. You can go +2 there because we did break out into some levels, but I play things a little bit more cautious. So let's take a look at the charts and kind of see what we have. So let's just jump directly into our heat map, and you can see, well, Oracle's up 40%. So the AI craze is still around. NVIDIA up 4%, things like that. Now, Oracle basically just launched themselves into kind of a carryover, meaning they can service things at NVIDIA and Microsoft and some of the other ones that are already doing this. They could build off of that infrastructure. So they're basically just this giant company that just jumped on board. And this is all with just contracts and news. There's no numbers yet. There's no money being made yet. But I've seen this before with the dot-com bubble expansion. Now, what this tells me is the euphoria is not done. Whether you believe it or not, whether it's great or not, doesn't matter. The euphoria is still there. Money is still coming into these markets. So big move there. Now, the Dow, on the other hand, it slipped a little bit. I was cruising around. I saw that Apple was kind of skittish, a little bit of worries on projected sales on what their 17, their new phone will do. This is just maybe just kind of a knee-jerk reaction to some worries, stuff like that. But it's a big component of the Dow 30, so it could be adding some weight to it. Another one was McDonald's. Some worries about competition, restaurants in general. What are they going to do when it comes to their overhead and wages? So you get two companies like this that weigh heavily on the Dow itself. You're going to get the diamonds doing this. However, all that being set aside, let's take a look at our SPY chart. And that's just kind of the biggest news I've perused around. I'm sure you guys have probably found it as well. It's done this, hasn't it? We've got this move to the upside. We've got this trend we've been talking about, higher highs, higher lows, ascending triangle, consolidation breakouts. And here we are again. So it's another gap to the upside. I'm comfortable with it. It's very strong. I could see it retrace a little bit or move sideways. Let's see what happens with that CPI number. But the overall sentiment, folks, is extremely bullish. And it is getting more specific. Now, what I like to look at, and once again, I've been trading for many, many years. I've been through booms and busts a lot. When things get very specific, they're usually attached to one certain darling. We've been talking to them as the Mag 7 for a while. However, with this AI news, I can tell that that's basically the main driver. We have looked at a lot of good stocks that are bullish and strong and making revenue and making numbers, but they pull back a little bit and then they don't do so well. In fact, guys, I've got a few we could look at from last week's class. Trades that I got into that aren't going anywhere. Trades that never triggered, that were really good setups, things of that nature. On the bear side, it's kind of the same. So it's getting very exclusive on what actually moves and what doesn't. So there's my soapbox. What does that leave us for today? Well, let's take a look at some of the interesting points. The first one is, the Dow slipped a little bit. It doesn't seem like it's going to make it back. It doesn't mean it's bad. There's just too larger company that could be weighing on it. The NASDAQ itself and the S&P, you can see that Oracle being 40% of that, here it is again, is going to have a big effect on it. So is this just the power of an individual company that's so large it's pushing the S&P and the Qs to higher highs? The answer is yes. Is this a sustainable thing? Well, let's go back to it. It has been for quite some time, hasn't it? So we just kind of have to sit back and see if we can't take advantage of it. Other than that, folks, it is kind of a duck hunt. It really is. You're going to get into something. It's going to work for you a little bit. It'll go against you a little bit. Or you might catch something like an Oracle. Or you might catch something like even NVIDIA's up on the news. Just another confirmation of how important AI could be. All right. So let's get started with our choices here, guys. Let's take a look at LSCC. And by the way, you guys can start typing in some trades if you guys want to look at them. Please do. Okay, thanks, Mike. Let's get going on this. So technology, semiconductor company, nice base. Some of the things that I have found that are they can be pretty tricky. They're a little bit frustrating. I do wait for confirmation. You guys probably know me well enough if you've coached with me or not. I like to see things confirm or break above previous highs or previous lows before I enter them. I'm usually a little bit late, but I'm also a little bit late to exit, meaning I'll milk stuff a little bit further than most. That's just my personality. So when you see shadows like this, shadows at the downside, upside, there's a lot of indecision here. What I like here, Mike, is that you've actually found something that is really pushing and pulling with investors. And traders, they really like it to buy at this place, but at the bottom here, but they're not comfortable yet when it comes to that breakout. As soon as you do get that comfort and it does break out, that could be a nice trade. But it's going to take a lot of patience. A lot of these trades will. A lot of them can turn around and correct on you. So keep that in mind. Let me add it to the bull watch list because I do like it. All right, let's take a look at DEC. Here's DEC. This one's pretty interesting. DEC was really good way in the past, and then everything just kind of fell off and went back to the risk on stuff, the AI stuff, the darlings, things of that nature. I mean, once these markets got comfortable and they weren't as worried, that money came right back in, and it really came right back into the stuff that was leading. In this case, I see a little bit of a relief rally. I'm going to call it that because it's tough. I guess I'd have to zoom in more, but the volume doesn't seem like it's having any of these spikes like it usually does around the earnings. So it's a little flat. It's up. It is at resistance area. So a couple things you could do with this is maybe a range bound. It looks like it might want to pivot here. Now, if this decides to pivot, then we have our first higher low, don't we? So now this becomes more of a +1, 0. 0 to +1, because you could play it maybe up to this previous level. And then if it breaks above this, then we're looking maybe a +2. Now, it does have resistance up at this area that it's set after this gap. Understand, folks, when stocks gap based on earnings, this is usually because of numbers. This becomes your not your chartist or your price action guy. This becomes your fundamentalist. Okay, this is what they make. This is what they lost. This is what they project. A plus B minus C divided by whatever. Boom, this is what it should be worth. So that's where you get that initial gap. Now, what it does afterwards is expectations, projections, discounts. Is this cheap? Is this good? Is this too expensive? Do I have too many shares of this? Should I move it to another stock? And that becomes the second part of this movement. Now, obviously, after this earnings, it was pretty good, gapped up enough, but the immediate reaction was a pullback. It was a sell-off. So unless the traders that are out of the stock are out of it already, we might see it hesitate a little bit more at this first level. See if I can draw a big arrow for you. But if it can sustain and pivot where it's at here and break out, we have something else. So that was a pretty good explanation on what I could have just said. If you want this to prove that is actually strong enough to continue above that resistance, this would be a better purchase price than if it was to confirm a pivot here. Just higher probability. Now, if it hits this and rolls back over, you've got something that could be kind of sideways. So on this, Mike, I'm not sure exactly where to put it. If it pivots, I'd like to put it on the bull side. If it's not, I'm going to put it on sideways. So since I have room on the sideways, I'm going to put deck as sideways, and I'm going to put my asterisk out there. You guys know I love those. And that asterisk means up, potentially. All right, great. Thanks for those. Let's take a look at NVT. Nice little high base breakout in industrials, electrical equipment. Let me zoom in on this a little bit. Thanks, Mason. Yeah, kind of the same idea here. Just it's consolidating a sideways trade, a little bit of a pop-up. Kind of a no-brainer on this one. I do think this could kind of just gap up and go sideways and maybe correct. Now, I'm basing a lot of it off of just this previous movement. Here was its earnings. It was accepted. It was great. However, a little reluctant. This is maybe a push. It could be euphoric. I don't know. It could be, I mean, when you see this, it could be something going on fiscally in Europe, whatever the FTSE's doing. Maybe the FTSE had a good day. I know that they've got their interest rates and their inflation and problems and stuff like that. However, if it can sustain above this level, even pull back, kind of a sideways, so a 0 to +1 for a little bit. I like it. I put it on the list. Let's go to another one. This is Win. The casinos have been super interesting as of late. This looks strong. I don't know if you guys looked at LVS or MGM, things like that. But this is a nice little bull pullback. Let's see what it does. I'd still keep it kind of as a +1. It did seem to do something like this. This was a good pullback here. Although this was a decent pullback that took off, but it was over its earnings, which is past. So if it can stay flat above that 122, if you want to be more of a stickler on it, hopefully you guys can see this. You can wait for it to get above that line, or just a larger candle, because when it does hit larger candles, it seems to kind of race. I mean, these are a little, I don't know, because it was at the lower end. So same as the last trade. I mean, we could be patient, wait for it to get above that total resistance. You could play something sideways to up on the longer term, sometimes sort of a diagonal spread between 122 and 128. But I can put Win up on the bull as well, more of a bull sideways. And let's take a look at Hood. This is one I haven't seen for a while. I used to follow this quite a bit. You take a look at Robinhood, which kind of started as, hey, we're a smaller brokerage. We could do crypto stuff. It's back in play, it looks like. So nice little breakout. Just make sure it can stay above that resistance level here, and more of a plus, a 0 to +1. So just be patient with this, or play something that's going to give you some sort of credit. All right, thanks, Mason. Let's move over to PEP. Got PepsiCo here. Target 138 put spread. 138, 144 question mark. I don't mind that. Sure. Okay, let's take a look at it. Thanks for the setup as well there, Bill. So yeah, a couple things to look at. So 138, definitely a previous support level. One thing that it paid a dividend a little while ago, but boy, look at the sell-off that this had when it came back up. Yeah, I could see this kind of bleed over. I like the consolidation it has. Even if it bounces up a little bit, you do have some resistance here, right? and the 200-day moving average, and you are below that 50 as well. So this might take a little bit, and maybe it just stays sideways or goes back higher and then bleeds lower. But I'd be fine with that. Vertical spread on that's kind of nice. You can kind of absorb that and let it go. I like it. Let's go ahead and put that down as a bear. TEM. All right, Cassandra has TEM Healthcare. Looks like an ascending triangle pattern on it. Yeah, okay. Yeah, let me draw the ascending triangle pattern that I'm seeing on this, if you guys can see it as well. This did have a pretty decent breakout of resistance. Look at that. Pushed above it, got pretty volatile, but it did come back and retest it. Notice the shadows. Let me go ahead and erase this. Notice the shadows as of late. Kind of like what we were talking about with Mike's trade. I believe it was I think it was LSCC. But anyways, shadows up, shadows down. This is indecision. So people are selling it up here and then they're buying it out there. So it's cool. The longer that does that, it actually builds power. So be patient and wait for it to kind of really shoot up. If you want to be really reserved, you can wait for it to get above maybe this area, but at least the most recent area, around that area, or around, 3 days ago's high. And you might have something to do. This could potentially kind of break out and then retest. You're going to have to think about your time frame on that, maybe a week and a half, or if you're going to target it, you could target it with something like I like the out of the money or butterfly spread, targeted butterfly. If you're going to do something like a vertical spread, you got to make sure that you give it at least enough room to breathe, but you don't want to go too far out in time to where you won't make any money if it does it quickly. So I would suggest something more like a targeted butterfly, or maybe even a out of the money calendar spread. That way you have the ability to do something with it if it does do it within that first week. But that's a good trade. Let's put it to the bull list. VSCO. Okay. Here's another one. Looks like it's having a little bit of a pullback right at that 200-day. I do like how it's kind of marched itself up. Be patient with this. That 200-day moving average, I think I went on a rant a few weeks ago or a month ago about this. Like, that 200-day moving average means a lot to somebody who has it on their screen, and that's kind of the joke. But it's the momentum that matters. So whatever the earnings were, it caused some sort of a turmoil. But boy, it got acquired back up to this area, and it seems like it might bounce here for a bit. I would probably lean a little bit more towards the sideways side, be super reserved, make sure that it's probably going to push and pull on that 200. So I'd do something more sideways. Let me put it on the sideways with a asterisk. Take a look at BZ. Communication services, internet. There we go. A little bit more relevant to what is going on. And it's actually behaving as such. It based out of China, nice little high base. This seems to have, well, as its earnings, it broke out a little bit, but don't be surprised if you get a little bit of bleed. And, oh, geez, it's kind of hard because this really came off pretty hard. But here's one. It just got up, and then its retest was pretty deep. Here's another one where it was up just for a second, hung on for a day or so, and then it went kind of right back down. Now, this is fine. This is its earnings, but I would imagine it might do the same thing here. Something super tight. Maybe it'll come back down, pull this. So just be tight with it. Maybe in the money, or I should say at the money vertical spread that's shorter term. Might be a good one, but let's put it down on the bull side. Thanks for that, Cassandra. Okay, let's get to XLF. Ooh, an ETF itself. XLF is good. The pullback is decent. I like it. I like how it's kind of sitting around this. I talked about the financial sector. I thought it was going to get stronger, even though some of them, some stocks in there didn't. The overall is just kind of holding in there. So I'm not super bullish on it. I like if it could keep that 53 floor. You guys could see that it actually busted out above it here by a few cents. So and right here. So I'm going to keep it. This is going to be more of a sideways to slight up. Most all ETFs I play either targeted butterfly or kind of a real low diagonal, stuff like that. Even some sideways or range bound because they don't really jump around a ton. So if you wanted to play in between the 54, 53 with some sort of a sideways trade for the next week or so, that'd be great. Okay, thanks. David just says it was a 53, 54. I like that play. Let me put it down on the sideways But since it's an upward movement, I'll put an asterisk on it. Okay, moving on. Okay, so let's do this. Let's take a look at a couple that I've noticed that we talked about last week. This is DraftKings. So DraftKings was a bull, and I really like this trade. It was on the 3rd, right? But it never closed above the previous high. I thought it was going to make it at this day, and it didn't. But still a bull trade, still looks pretty decent. Here's Delta Airlines, another one that I had a order to fill, and it didn't. This is the 3rd. You could see it set that, and it did not close there. I was ready to get into this. Even if you did get into it, it's just kind of this sideways meandering, not really going anywhere. What are some? O'Reilly. Now this one was just taking off and going gangbusters. We liked this one. Here's the 3rd, right about there, right here. And it did confirm that next day. Unfortunately, this wasn't in my queue, but if you're in it, you're probably okay, but a slight gain. You see where I'm going, folks? So there's not a ton of follow through in some of these. Let's go to CAVA. This was a bear trade. I had sideways to bearish, and it actually didn't quite confirm. It could confirm for me today because it's breaking this floor. It's got to close there, but it's not like it's fallen apart. So we're not getting these big moves up, big moves down. Let's take a look at ACN. ACN is a bear that actually did pretty decent, but I mean, it's doing decent today, but look at this. Here's where we talked about it. Didn't trigger, and guess what? Boom, it triggered today, but guess what? It's already at my target. So these are kind of the things that you have to play with and you mess with. Now, let's carry one. Here's one that I wanted to share with you guys. This is PayPal. This was our sideways trade with an asterisk, and this is what it was I figured if this thing could break the floor, that would be a nice trade. It looks like it is right about now. So I do like PayPal. I moved it over to the Bear Watch. Let me clean that up and make sure it's on it. So I will. That's kind of the one that I have for our bears today. So that's kind of where we're sitting. All right, so let's just finish up here, folks. Thanks for your participation. Let me go ahead and share the trades that we have. Here they are. The asterisk. These were mostly kind of sideways to up on XLF, deck sideways to down. I do like those leaning more towards the downside. Just be patient with all these. The up, the side. PayPal, once again, that was a sideways trade from last week, but I do like how it's kind of breaking out and rolling over. We saw that the financial sector itself, right, is it's in a bull pullback, but it's more sideways than falling apart. But today's action was definitely inflationary driven with that PPI. I mean, that was expected to expand by 0.3. It actually came out as a -1. First negative sign we've seen in 4 months. We got the CPI tomorrow, and then Oracle. Oracle just proved to me that this euphoria when it comes to the AI push is nowhere near done. But we know where the focus is. It's definitely glass half full. All right, guys. Awesome class today. Thank you so much for your participation, and we'll talk to you next time. Bye, everybody.